Experts predict Bitcoin will hit $100,000 soon. Below are their predictions. For the first time this year, Bitcoin reached its latest all-time high of $68,000 last month. By early December, it had dropped back below $46,000. Bitcoin's price has risen dramatically after starting the year below $30,000 in January. There are wildly fluctuating prices every day and even every minute. In the last month, Bitcoin's price has ranged from $45,000 to over $59,000. At its lowest point, it had been below $46,000 multiple times in recent weeks. It gained over $50,000 for the first time since December 12 on December 23. In spite of the volatility, experts predict Bitcoin will pass the $100,000 mark soon, though they differ as to when exactly that will happen. Cryptocurrency volatility is nothing new, and new crypto investors should exercise extreme caution when allocating a portion of their portfolio to cryptocurrency. In recent years, Bitcoin has shown a steadier rise in value as any other cryptocurrency. Investors in Bitcoin are only reasonable to wonder how high the price can eventually go. In contrast to more established asset classes, Bitcoin's price is extremely difficult to predict and even more susceptible to market factors. We still decided to get some expert opinions. Here's what they said. Predictions for Bitcoin prices. According to conservative predictions, Bitcoin will reach $100,000 by 2023. There are some experts who are more optimistic. Crypto specialist Kate Waltman, a New York-based certified public accountant who specializes in cryptocurrency, predicts $100,000 Bitcoin in Q1 2022 or sooner. Rather than predicting a number and a date, others point to the trend of increasing value over time. Jurian Timmer, director of global macro at Fidelity Investments, predicted last month that Bitcoin's long-term value would rise pretty sustainably, driven by organic market movement, with the $100,000 threshold in sight. Kiana Donyal, founder of Investiva and author of Cryptocurrency Investing for Dummies, predicts volatility and growth from Bitcoin in the short run. Well-known crypto investors, evangelists, and public commentators have widely varying opinions and predictions on how high Bitcoin can go, and when. Listed in order of low to high over the next year are some more predictions we found. Ian Bellina, founder of Token Metrics, a crypto research and media company, Bitcoin investor. It is predicted that $75,000 will be earned by 2021. Technical data certainly shows $100,000 isn't out of the question, but Bellina told Next Advisor he prefers to take a more cautious approach. Matthew Hyland, analyst of blockchain data and technical analysis. By 2022, $250,000 is expected. Bitcoin's inevitable crossover to $100,000 will trigger a euphoric bull run, Hyland has said on his Twitter account. In 2017, after Thanksgiving, Bitcoin rose from $8,000 to $20,000, a 150% increase. Robert Breedlove, owner and CEO of Parallax Digital, a firm that markets and consults on digital assets. In October 2021, now past, we predicted $307,000, and by 2031 we expected $12.5 million. Due to inflationary pressures after COVID-19, the value of Bitcoin will increase higher than previously projected. In an interview earlier this year, Breedlove also mentioned that the last quarter of 2021 is roughly 510 days after a Bitcoin algorithm change called halving, in which Bitcoin's mining transactions on the blockchain. Breedlove said past halving events have been followed by new highs roughly 500 days afterward. The prediction of Bitcoin isn't just limited to crypto insiders. Bloomberg predicts it will hit $400,000 by 2022, while JP Morgan predicts a long-term high of $146,000. Bitcoin's price, what influences it? Cryptocurrencies' prices are influenced by the same factors as any other currency or investment, including supply and demand, public sentiment, news cycles, market events, scarcity, and more. Bitcoin is a new and emerging asset that is impacted by additional factors than the average currency or security. Here are some. Availability. Bitcoins will stop being minted at 21 million and there are only 18 to 19 million currently in circulation. There is no doubt that cryptocurrencies' built-in scarcity is one of its main appeals. According to Alexis Johnson, president of Lightnode Media, a blockchain-based public relations and events company, there is a fixed supply and an increasing demand. According to other experts, Bitcoin has value because people give it value. Nelson Merchant, co-founder of Lightnode Media, says people are buying because of the psychological aspect. Bitcoin and other cryptocurrencies can be difficult to discern as legitimate because of this. Supply and demand only work when people want something that previously wasn't available. Bitcoin's origins almost seem like a scam, Merchant says. Although he's seen his crypto holdings reach millions at times since he began investing in 2017, he's also seen them disappear in an instant. I'm a big believer that if it's not in cash, you don't really have that money because in crypto, anything can drop dramatically overnight, Merchant says. In order to protect your money from volatility, certified financial planners recommend allocating only 1% to 5% of your portfolio to crypto. Mainstream adoption. One of the main factors driving the price increase of Bitcoin is the rate at which new consumers are buying and exploring cryptocurrency, says Waltman. Crypto technology is being adopted at a faster rate than humans first adopted internet technology, she says. Assuming it continues, the compounding acceleration of new adoption could keep pushing the value of Bitcoin higher and higher. Digital asset management firm CoinShares reports that Bitcoin adoption is growing at a rate of 113% annually. Meanwhile, people adopted the internet at a slower rate of 63%. If people warm up to Bitcoin at a comparable rate to that of the internet's early days, or faster, the report makes the case that there will be 1 billion users by 2024 and 4 billion users by 2030. CoinDesk reported last month the number of new wallets worldwide increased 45% from January 2020 to January 2021, to an estimated 66 million. Popular crypto exchange Coinbase says it has now over 73 million worldwide users, while fellow exchange Gemini recently released its State of US Crypto report, which found 21.2 million Americans own cryptocurrency of some kind. Regulation. Federal officials have made it clear in recent months they are paying attention to the crypto industry. President Joe Biden recently signed an infrastructure bill requiring all crypto exchanges to notify the IRS of their transactions. Similarly, Treasury Secretary Janet Yellen recently said stablecoins, a type of crypto linked to the value of the US dollar, should be subject to federal oversight. The conversation on regulatory policies is patchy, said an industry white paper published by Flourish, a fintech platform designed for investment advisors. With a relatively new asset class like cryptocurrency, any new regulation has potential to impact value and in turn investors' portfolios. The price of Bitcoin dropped after China banned crypto in September 2021, for example, but it has since risen and resumed its usual volatility. In its crawl, walk, run approach toward mainstream crypto adoption, the Securities and Exchange Commission is taking all decisions case by case, despite there being about a decade of precedent for Bitcoin. Ben Cruikshank, head of Flourish, explains, regulators can change their minds at any time. Cycles of mining. A cycle known as halving also affects Bitcoin's price. Essentially, halving is a step in the Bitcoin mining process that results in the reward for mining Bitcoin transactions being cut in half. It's complicated and algorithmic in nature. Halving affects the rate at which new coins enter circulation, which has an impact on the value of existing Bitcoin holdings. There has been a correlation between halvings and booms and busts historically. Some experts have even predicted these cycles down to the day after a halving event has ended. Understanding Bitcoin price projections for investors. Financial planners and other experts warn against letting Bitcoin's price fluctuations lead you to make emotional decisions. The dollar-cost averaging strategy has shown to be beneficial to investors who contribute regularly to passive index funds and ETFs. Investing in cryptocurrency shouldn't exceed 5% of your overall portfolio, and you shouldn't invest at the expense of saving for emergencies or paying down high-interest debts. Long-term wealth and retirement savings are most successful for people who invest in diversified investments like low-cost index funds, with crypto playing a very small role. And even with crypto, experts say a set-it-and-forget-it approach makes sense. Passive investing is a very valid way to achieve financial goals, says Arkansas-based certified financial planner Sarah Catherine Gutierrez.
Since crypto is still new to most people, it's okay to wait and see how things unfold before putting your money on the line.
We only have about 10 years of data to inform crypto price predictions, and the value of Bitcoin, while climbing long-term, is highly volatile from day to day. Due to volatility, it is hard to understand the what and why of your crypto strategy. You should ask yourself why you want to invest in Bitcoin or any other alternative asset before investing. That will help you stay focused. I don't think people understand across the board how to value Bitcoin, says Gutierrez. When you're buying it, you need to know your expectation of what value you're going to get from what you're buying. Financial planners don't have a bias against cryptocurrency, Gutierrez says, particularly if a client expresses an interest in learning about it. However, you should ask yourself whether you need crypto as part of your plan. In most cases, says Gutierrez, the answer is no. Our take is that we don't think you need Bitcoin in order to reach financial goals, she says, adding that the average person should favor simple ways of investing that are easy to understand. This will keep you on track for core financial goals and better position you long-term for a healthy retirement. Like and subscribe. And make sure to comment. We love all your thoughts on the video.